Hello. Today we're going to explore how the S&P 500 index drives the movements of the SPY ETF and which key economic indicators influence these changes. The S&P 500 is one of the most important measures of the US economy, and it plays a major role in determining the performance of SPY. Let's dive into the details. First, let's start by explaining what the S&P 500 index is. The S&P 500 is an index that tracks the stock performance of 500 large companies in the US. It's considered one of the best indicators of the overall health of the US economy. This index represents a wide range of industries, including technology, finance, healthcare, and more. Because of this, its movement reflects investor confidence in the broader economy. SPY is an ETF that tracks the S&P 500 index, so its performance is directly tied to the S&P 500's ups and downs. So, what are the major economic indicators that influence the S&P 500 and, by extension, SPY? The first key indicator is GDP growth. GDP measures the economic activity of a country. As the economy grows, company profits tend to rise, which can positively impact the S&P 500 index and SPY ETF. The second key indicator is the unemployment rate. Lower unemployment typically means that consumers are spending more money, which boosts corporate earnings. A rising unemployment rate, however, could signal a weakening economy and cause the S&P 500 to fall. Third, we have inflation. High inflation can increase business costs and reduce consumer spending, which negatively affects the S&P 500. But moderate inflation often signals steady economic growth. Fourth, interest rates play a significant role. When interest rates rise, borrowing costs for companies increase, which can hurt profitability. This usually leads to downward pressure on the S&P 500. On the other hand, lower interest rates can provide a boost to the market by making borrowing cheaper. Corporate earnings also play a major role in determining the movement of the S&P 500 and SPY. Every quarter, the companies in the S&P 500 report their earnings, and this can significantly move the index. Big tech companies like Apple, Microsoft, and Amazon have a substantial impact on the index due to their large market caps. If these companies report better than expected earnings, the S&P 500 and SPY tend to rise. On the other hand, disappointing earnings results can lead to a drop in both the index and SPY. Beyond the domestic economy, global economic factors can also affect the S&P 500 and SPY. Events like trade wars, fluctuations in oil prices, or global recessions can impact US companies and the broader economy. With the interconnectedness of global supply chains, economic issues in one country can have a ripple effect across the world. That's why investors need to keep an eye on both domestic economic indicators and global events. Today we explored how the S&P 500 index and SPY ETF are influenced by key economic indicators. The S&P 500 is a critical measure of the US economy, and factors like GDP growth, unemployment, inflation, and interest rates all have a direct impact on its movement. Additionally, corporate earnings and global economic factors also play a crucial role in shaping SPY's performance. If you're investing in SPY or following the S&P 500, it's essential to monitor these economic indicators regularly. Thanks for watching. If you found this video helpful, don't forget to like, subscribe, and turn on notifications. We'll be back with more valuable insights soon.